Hello, ladies and gentlemen. Good morning. Welcome to the Fireside Chat session, Frontier Capital Investing in the Next Billion. Let's welcome William. Yeah, he's the partner, operations and investor relations from Monashees. Yeah, first of all, William, could you please briefly introduce yourself and your organization?
Sure. Thank you, Yimie. First, would like to thank Dr. Lu and Jason for the opportunity to speak here again for the second year in a row. Want to thank Meta World Peace for preparing the floor for me. So I think that's quite a challenge to speak after him, but hope you will find it interesting what I have to bring about venture capital in Latin America. So, as Yimie said, I'm William. I'm a partner at Monashees. Monashees is the pioneer and, on a humble way, premier venture capital firm in Latin America. We started 20 years ago in 2005 when there was really nothing in venture capital in the region. For you to have an idea, back in 2005, the whole China VC market was $1 billion. So it was pretty much limited to Silicon Valley. And what we believed back then was that venture capital was not limited to Silicon Valley, and that Brazil and later on Latin America could be a fertile ground for tech entrepreneurship. Fast forward 20 years, we've invested in 152 companies, raised 12 funds, about $1.5 billion from investors from across the world. 20% of our LP base is actually from Asia. We have some of the largest Chinese tech companies, sovereign funds, insurance companies from the region as investors in our funds. Half of our investors are from the US, and the remaining 30% from Brazil and Latin America. We usually back early stage companies, like we like to lead Series A rounds, invest in seed rounds, also with a very high bar, agnostic in terms of sector. Just like digital technology. As I mentioned, we started in Brazil. We grown to invest in other countries in Latin America, so Argentina, Chile, Mexico, Colombia. And more recently, we truly grew organically and because of the ambition of the Latin American founders to truly become a global Latin American venture capital firm. So investing not only on partners that are building local businesses, but also those with a global ambition who start from Latin America and expand their businesses abroad, or Latin American founders that are based outside of the region, building global businesses as well, and companies that have Latin America as a strategic market and want to have a local partner.
Yes, to start, Monashees is actively investing in dynamic and often underserved markets. Could you share your company's strategic focus when it comes to identifying and investing what you define as frontier capital or the next billion opportunities?
That's a very good question, Yimie. Probably other venture capital firms will try to predict the future and say, oh, we have this thesis and we believe this is where the world is going. We prefer to take a more humble view. We have our prepared minds, we have our point of views, but we really leave it to the entrepreneurs to dictate what the new businesses or the new frontiers are. So with the brand that we've built and the partnerships that we've built over the years, we try to have an advanced position in the deal flow, so to have the opportunity to speak and to have contact with the best founders. And with the knowledge we have and the partner recognition we've built over these 20 years, try to identify the founders that have the skills and have the passions to bring a business from 0 to 1 and from 1 to the universe in a short period of time. For you to have an idea, we have access to about 90% of all Series A rounds that happen in Latin America. A very good US fund will probably have a coverage of 50%. So we want to talk, we want to have access, and then based on the best of our ability, we want to decide in which businesses to invest, and in most cases also convince the founders that we would be their best partners especially in the beginning of their journey.
Okay, I have another question. Like looking at Latin America, what are the most compelling macro trends currently driving economic growth and digital adoption, creating these next billion opportunities?
Also a good question. I could start by answering, something linked to tariff war, but I would say that this is more momentary. Maybe I would guide my answer towards what's more fundamental to the region. So let's say, for instance, internet penetration. It's a very digital savvy population that we have in Latin America. So about the digital penetration there is similar to what it is in China. So 76% of people are connected to the grid, use mobile phones and so on. We are, as a region, Latin America, the largest market for TikTok, or the second largest market for all Meta products. The second largest for YouTube, the first largest for Uber, being Brazil the first market for Uber worldwide. So this is something like the tech savviness of the population. It's something really special of the region. I would also add the advances we have in fintech. So we have examples as Nubank. It's an inspirational company in fintech, not only for the region but globally. It's a neobank that had its IPO a few years ago in New York Stock Exchange, and it's worth, I don't know, like $30-40 billion as of today. It reached 70 billion at a certain point, and really, especially the Brazilian finance regulator is leading the way on what a government can do, and really regulating in favor of competition, in favor of innovation. So many other countries in the region are inspiring themselves in the example of the Brazilian Central Bank. And we receive often delegations from Southeast Asia, from Europe, from other regions that want to learn what we are doing there. So for instance, the Brazilian regulator came up with an instant payment platform called Pix, inspiring the UPI of India, but the penetration was much more faster than it was in India. Just last year, about $5 trillion worth transaction over the platform. 80% of the adult Brazilian population uses Pix, and this is the first step of many other innovations that the central government is rolling out, the central bank is rolling out, irrespective of government in place. It started back in the early 2010s. We had different governments on the way, but the regulator has been promoting that, and this is definitely a tailwind for the region.
Okay. Yeah, what are the biggest misconceptions or underestimations that developed market investors often have about the potential and realities of investing in frontier economies from your point of view?
That's a good one. Thank you, Yimie. I think what I will answer about Latin America maybe applies for Southeast Asia as well and other developing regions. So maybe I could explore three things. Sometimes people usually believe that the market's small, that there is a lack of talent, and that there is no liquidity. So how am I, coming out of this investment? First, in terms of the size of the market. Well, Latin America as a region has 660 million people, so about the same size of Southeast Asia combined, with a difference, like the GDP per capita is almost twice. So it's $11,000 compared to $6,000 more or less in Southeast Asia. What else? Like if Latin America was a country, like it would be the third largest economy in the world, just behind the US and China. And also, it's a country, it's a region with only two languages, Spanish and Portuguese. The cultural background's more or less shared in a Christian background. So they're different from Southeast Asia. There is very fragmented. So this is something that makes us very unique and proves how big the market can be. Companies, we have two major economies there, Brazil and Mexico. Companies that are starting those two countries have the potential to become multi-billion-dollar companies focusing only in the local markets. And for most businesses, companies that start in Argentina, Colombia, or Chile, from the very beginning, they have like the idea that they will have to expand. And for those reasons that I explained, it's relatively easier to expand pan-regionally, even though I have to say every country has its own particularities and regulations. Still, like the shared cultural background and language makes things a little bit more smooth. So this is on the size of the market. Then on talent. I have to be transparent with you. When we started 20 years ago, and I was at school back then, the founding partners of Monashees would go to the top business schools, engineering schools in the country to talk about venture capital. They would have to offer a free breakfast so that people would come, otherwise the room would be empty, and would explain what tech entrepreneurship was about, what venture capital investment was about. And at the end, they would ask, is there anyone here in the room that considers becoming a tech entrepreneur? And nobody raised the hand. For many years, nobody raised the hand. But then things changed, and nowadays, well, not today, but for the last 5-6 years, if we go back to the same schools and we pose the question, you see like half of the room raising the hand. So they want to start a business or they want to work in a tech company and start their careers there. So there is talent. We've been able to form a generation of engineers. So this is something that is much more available now. And we have a first generation of experienced and proven founders that in most cases are, again, starting new businesses or financing as angels other businesses. And the third point is liquidity. So it is a challenging for developing markets, but at least in Brazil, we had a first full cycle. So we started a little bit, we joke that we started running the marathon 5 kilometers before the starting line, because we started in 2005, but the industry really took off in 2010 in the region. And the first generation of companies that were invested not only by us, but by other funds as well in the early 2010s, they were able to exit between 2018 and 2022. So in our case, we returned several times our earlier vintages, so did other funds in the region, proving that it's possible to invest and in a reasonable time, divest and generate interesting returns for the investors. Like everywhere else in the world, like we are facing this moment in which the liquidity window is closed, but we truly believe it's, I will not guess when the window is reopening. We see good signs, but it's just a matter of time for us to see like more exits, local IPOs, more international IPOs, more M&A activity going on besides secondaries.
Okay, yeah. Can you share specific success stories, the one with the highest return from your the company's portfolio, where an investment has truly reached the next billion or demonstrated significant progress towards that goal? And how big is the return, if you are at liberty to share? And I think every investor in the room will be very interested to know.
Sure, thanks Yimie. I would mention one, there are many successful stories. As you know, in venture capital, for each successful story, there are probably 5 others that didn't succeed, but I will address your question, not only in the return that was pretty good to us, but because the company represented a true inflection point for the industry in the region. Back in 2013, we invested in a company called 99. It was a ride-hailing company. Uber had just entered Brazil at the time, and there were other companies that were emerging. This one was focused on taxis, and later it became peer-to-peer as well. So it started in 2013, growth, and really was able to attract growth investment. In 2017, Didi Chuxing from China invested and acquired 10% of the company, and 1 year later, in the early 2018, they acquired the whole company for $1 billion. So it was the first $1 billion exit in Brazil, the first $1 billion valuation, and it really proved that from 2013 to 2018, so in 5 years, you were able to bring a company from almost nothing in the beginning to $1 billion. It was an inflection point, not only to us, like we're really happy we finally saw our first carry check, but most importantly for entrepreneurs, because and we heard it from one of our most experienced investors from the US. They said now entrepreneurs will know that it's possible to do it, and it's a viable career path. They can make a lot of money in a shorter period of time. So for us, it was a very interesting return. Like we returned a few of our earlier funds multiple times because of this investment. But what it represented to the region was really emblematic, and it really opened the window of liquidity we saw from 2018 until early 2022.
Okay, now we move to challenges. Like frontier markets are often associated with higher risks. Like how do you guys evaluate and mitigate these risks, like political instability, currency fluctuations, legal uncertainties, like while still sticking out attractive returns?
That's a very good point that we come across quite often, and several ways to address it. First, I think there must be in place an environment in which you can do business. There is a rule of law and a stable government. And we see that across the region with a few exceptions. So maybe Venezuela is an exception, or Argentina has been for a while, but things are getting better now. But in Brazil, Mexico, like the powerhouses, you see, even though there is change in governments or some fluctuation in the exchange rate, you see some relative stability in this country. So companies feel confident to go there and do business. This is to address a little bit the macro. On currency exchange, it's, there's a saying that God created currency exchange to make economies look stupid. So it's very, very hard to predict. And we invest across a period of 10 years, so you cannot hedge that. What you can do is what we believe that the returns would be so disproportional that they will offset any currency risk. But there is one less important thing that must be said. Tech venture capital is detached from macro. It's linked to tech cycles, and this is across the globe. So we had the semiconductor cycle, then we had the PC cycle, then we had the internet cycle, then we had the social, local, mobile, cloud, broadband cycle, and now we are in the AI cycle, more half the way in the AI cycle. So as you see returns of funds globally, they are more linked to these cycles. And what we have to be really keen is not to lose these windows of opportunities. And we see great opportunities in Latin America that came out of the mobile cycle. That was the cycle that we were surfing when the market started over there. And then we are seeing now with AI as well.
Scaling a business, my question, in frontier economies often presents unique challenges, and what are the most significant hurdles you've encountered, and whether it's related to infrastructure, talent, or market fragmentation?
Good point. Probably my answer, the first thing that comes to my mind has nothing to do with this, and there's something that we still lack in Latin America is growth capital. So in this first cycle of the industry, we were able to establish a very solid early stage industry, but we still do not have growth funds that are dedicated to Latin America. We have growth capital available. We have maybe a couple of recent funds. There are growth funds focused in the region, but mostly we rely on international capital that are looking at a global arena to invest. Some of them, they have local teams, especially private equity firms, but venture capital growth, we still rely mostly on the US names, some European, some Asian names. The very best companies have access, but there are also some very good companies that cannot attract this talent, and this is an issue we've been facing. Besides that, I mean, I mentioned a little bit about pan-regional expansion. That's something that we thought it was very difficult to do in early stage tech VC when we started, and we were proven wrong. There is a company in Colombia called Rappi. It's called kind of a Meituan for Latin America, or a DoorDash. Started in Colombia with a plan not to grow country by country, but city by city. So first Bogota, then Barranquilla, then São Paulo, then Rio. And they've proved that it's possible to do it. And finally, Latin American and other developing countries, like the challenge there is a challenge of execution. It's not that easy to do business over there. So it takes a lot of grit and courage. So it's less still a challenge of innovation. In some developed markets like China or the US, you innovate with something. 2 weeks later, there are 5 other companies with capital doing the same thing. In Latin America, it's not like this. There is a little bit of a moat in terms of capital availability of capital and also executing the business itself.
Unfortunately, we don't have enough time for further discussion. But before we wrap it up, if you could give one piece of advice to a founder building a company for the next billion, what would it be?
Oof. Very, very, very good. I would try to be really short, like on a very humble position. We have a motto in Monashees. We say the future is human. So that's not to say that technology is not advancing, but it's still going to be human-centric. When we see teams starting, we really bet on a team and the way they think about the future of sustainability, the way they treat employees, they treat their colleagues. So if there is one thought I would leave founders here with, would be like the most disruptive technology you will always come across is human potential. So bet on that first.
Thank you, William. I hope you enjoyed the session. Thank you.